Thank you for coming on into the live and sharing your essence with me, this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So the sideways consolidation continues for Bitcoin. Why is that? Well, the liquidity is just simply not there yet. It needs to induce it, and they don't want to go back into the vector candle so easily because it would be such an easy short to give. So they don't want to give away any free money, so they keep wick-whacking and scaring out both sides and allowing people to take profits on the position that they established to the upside. So let's go into high block and see what's going on with that. But first, I just want to just share how accurate the prediction from yesterday was actually, and then we'll go into the liquidity. So we mapped out the zones from both sides. We said you need to stay above below the 236 for a short, but either way you're going to come up to this pool. Sure enough, we came up to the pool, consolidated, and then we said you could possibly come up to the second pool. We came up to both pools. We did the consolidation at the first pool, came to the second pool, came back down. We held the 236, so the short is not on just yet. I mean, you can't get much more cool TA than that. And in 20 minutes, that hits the targets on both. No projections to both sides, mainly just that's the trajectory it's going to do, and that's the trajectory it did. Pretty fascinating. Anyway, so let's go back to high block and see what's going on in the charts. What's high block, you say? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters lie in wait. So let's do it now. So we're talking about those people that enter the short here, $303 million pool of 50xers. We said they'd come back to that. They did. We said, what about these guys up here at 34,481? There's some 111 million 50xers, so they came back to those too. That's why we got those numbers, because it's the three pillars of trading: liquidity, math, and momentum. You got to have all of those on your side to take a trade. Pattern trading isn't real. Don't believe any of those gurus upselling their trading groups. They make about 50 grand a month off your money, not even trading, and they joke about it in private. So they don't appreciate you, they appreciate your money. So let's go into the charts, shall we? And we'll go and try to ascertain everything. My daughter has a karate tournament, so we're streaming a little bit earlier today. Hopefully you guys can catch this update to catch up whatever move we're going to insinuate is coming. So it is the weekend, of course, so the weekend low liquidity pools. So right now you have a little bit more to the downside, 133 million and 50xers down at 33,845. So we're going to mark that off really quick. 33,845. 33,845, 845, 845. I do say there's some liquidity down below at 33,845. Okay, I say there is some lower level of liquidity there. And if we go to the higher time frame to expand our vision to the 7-day and switch this to max liquidity, I picked up that move on the 5-second chart. Nice! Braggadocious for the win. Booyah. Yeah, you gotta have the liquidity on your side, and you gotta have the math on your side. Like this looked like a short and then even then, like this did play out here with the 236 boom, and then when it dropped down to this 706 level, the trap door didn't open at the 706, right? So this did not open here, and then there's that large amount of liquidity opening up the short there. So I would have been like, nah, I'm cool, peace, and I would have closed that short, and that would have been all she wrote for that. And then they go and grab those guys, and it's just like this constant consolidation. And they did that before. Like if you go, let's go back in time, like all the way to here. The last time we hit the highs here, it was basically like, how many days of that? 23 days of sideways consolidation, of wick wackiness, barcoding, blah, 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 and then finally rise, stop hunt, rise, drop it. So, I mean, I would expect at least 23 days of the same. Like, why not? There's no liquidity to suggest going higher just yet. So let's expand our vision here and see if that's true. So the 7-day starting to generate some liquidity up at 35,250. Not notable, you know, single digits, 10 billion in that range, but more to the downside. Imbalance to the downside on the 7-day. Monthly. The monthly starting to get 7 billion up at 35.3, same region, but ultimately more down below, as they want these guys stop loss and profit to get hit. They might retrace down to test the stop loss zone, try to sweep the lows at some point. The 3-month also has the imbalance to the downside, not so much being generated up above just yet. 6-month imbalance to the downside, not so much generated up above just yet. Got 55 billion up at 36.3, another 55. Yeah, that's about the only pool. We got a double-digit pool up at 35.4, $18 billion. Other than that, not that much in that region. Even down in these regions, double digits in this path up to the upside. And this amazing stab to the upside, taking out all of that liquidity. On the 2-year, the 2-year does have 133 billion up at 36.4 for that final stab. But other than that, there's not really that much more up above. You got 71 billion, 37.2, 35 billion, 37.6, 24 billion, 38K. So they got a lot of work to do to start to thicken up this range, as they did back here. This is back in June. Back in June, they had more up in this region, and they still whacked around and left these guys on the chopping block for later. So they let these pools percolate up at 32.8. And then conversely, they've let this 23.6 pool just sit there too, and they didn't take it out. And they peeled out with that protected position level of it, like still allowing $253 billion to sit there. So that doesn't mean they necessarily clear the range. They did that down here too, 15K. They left that $100 billion band alone. So it doesn't mean they need to come up to this 36.4 level before reversing. They just need to generate enough liquidity on the charts to justify doing something. It'll start somewhere with the 50xers and the 100xers, which is why we look at this 1-minute time frame, 7 days of information. And as it stands, you still have that liquidity down below at 32,995. 32,995 has that thickest band of liquidity. If you look over to the right here, a lot of stacked long liquidation points down in that 33K region. So let's go ahead and mark that off. I think we already did, but let's just be thorough about it. We have the 32.8. Okay, we had the whole sweeping the range level. Impulse retrace continues. So that's basically played out for now. We'd have to, this coming back above this region came a little bit too high on the A wave for me, so I'm not liking this projection anymore. It played out through here, so we're just going to keep it simple. This already played out too. good call from yesterday. These pools were tapped. Let's turn on the momentum and see what's up. My daughter's got a karate tournament soon, so I gotta make this good. Link in the description for more, momentummaster.info. You can toggle all the features at Bitcoin's bottom. Before we knew it was a bottom, read about the trend cloud, the baselines, the stochastic array, and so on to see what is going on with that. So we were talking about this insinuation of the hourly cloud. That's what this thing is. And the hourly cloud did give us that curve, did give us that drop. So that is what you're looking for with that insinuation. You can get these little kind of cloud kiss rejection things, and that is the same on the opposite end of the spectrum. So it doesn't really matter which side you're looking at. You can get those insinuations of points of rejection before it knows it wants to reject there. And as it stands right now, we're holding the cloud. So it's time to reassess the situation. And you have your guys drawing these things and shifting their tea leaves around, and they're like, well, technically that broke down, so I'm gonna just put that there, even though that doesn't match standard TA. It's because trend lines don't really matter, bro. It just doesn't. It's all in your head. So if you go to this here, the volume weighted cloud is holding beneath the price, and you're getting kind of this triple bottom idea, head and shoulder, whatever you want to call it, W formation. So we could be breaking out here the bearish super trend, which previously broke that bullish super trend that was holding since the move up on October 12th all the way down here. Could be starting to make a stab to the upside here. Does the liquidity suggest that? You do have that 34,737 25x brethren that still needs to be requited. Let's add that there. 34,737 34,737. Close enough. So they could come up to that guy. Wouldn't be surprised. And let's go down the time frames real quick. Let's take a look. So the bullish trend-based fib levels are down here. Impulse retrace on the daily, and then the 236 entry model, 706 stutter, and breakthrough to the golden pocket and beyond up at the 2 level. Do we come up to the 2.4? I don't know. But let's go into what's happening in the oscillators for the daily. I believe the 3-day closed after our live stream yesterday, so let's see what that is. That's a indecision top, spinning top, doji, whatever you want to call it. A gravestone doji, I believe they call it that. Let's make sure I'm right on that. Let's go to the candles, sticks, gravestone doji. There you go, bearish. So the gravestone doji is closed for the 3-day, although it doesn't necessarily have to hold back. We still have money flow beneath the RSI, so that stab up to that 36.3 adaptive, which we rejected off of back in March 2022, could be some draw to the upside continuing. The Williams also still has room for this average to come up some more, at least have us go sideways for the average to come to it on the 3-day. Baseline still holding very wide apart and momentous to the upside, so could continue there. Let's go to the daily. Daily still holding strong. Money flow and RSI same levels. You could basically double top on this overbought status, but you are overbought on the daily. Moving to the 22. 22 has crossed down, and you're getting this reset of the stochastic. If you go to the 12 hour now, 12 hour, 12-hour crossing down on the baselines. What do I mean by that? Well, the baselines are your first sign of reversal, so they're one of the few leading moving averages that will start to cross and give you these insinuations before it happens, like here. So we're on the opposite end of the spectrum. One was here, now we're here. Does that mean we extended M and come back down? I have no idea, but generally these things do play out. Cross down event, played out. Cross up event, played out. Cross up, played out. Cross down, played out. Cross down, played out. It's just pretty accurate on that time frame, but you got a lot of wiggle room. Stop, hunt, rise, and dropping, for example. So yeah, these are the baselines for the 12 hours, starting to get oversold on the stochastic RSI. However, you have the MACD crossing down and the RSI and the money flow overbought still, and the Williams about to flash that alarming be careful signal if it does cross down at some point. 6 hour cross down from back here at the exact top and starting to suppress the price action with the baselines. And so the baselines are starting to win out, getting the alarming signal, possibly get one more push up and then come back down again. 6 hours starting to get a little bit fatigued. 4 hour cross down event on the baseline, still holding this thick. So the angle of the cloud on the 4 hour is very thick and pointed. At this angle, there is no way I can reasonably do something like this just yet. The reason being, more particularly here, this angle is pointing up strongly at 2 o'clock, so I am not really interested in shorting. I am putting the downside projections, but everything would be within a range bound structure for the most part, is what I'm seeing, similar to June. So this is a very thick cloud that I would not be interested in going against right now. Similar to, what happened from August 12th. This cloud has just maintained, as has the super trend. So this is a trend you don't want to go against right now necessarily. And even with the hourly, when the hourly scalp we were talking about, we were coming back to that super trend on the hourly, and possibly we broke it and we were retracing the cloud, and we were talking about B coming up to the cloud and rejecting. This was an easier short because you already broke the super trend. So in terms of an hourly scalp, this little bit down here, this 2%, was a more effective idea because this had broken the super trend on the hourly. We have yet to do that on the 4 hour, so any type of swing play or the insinuation of a swing play has yet to be decided. So as we approach the hourly now, hourly meandering in ambiguous territory at the 50 level. Williams slowly coming down here on the hourly too. The hourly could flip to bullish and shoot to the upside based on the lower time frame. So let's go see what the 15-minute is doing. 15-minute overbought, but basically holding the cloud here as it does some wick-wackiness from the New York session. It is algorithmic weekend trading. So the algorithm has been giving some little moves over the weekend and then basically swiping both sides and going even Steven. So they did induce that 78 million down below as compared to the 64 million up above and 77 million up. So there is a slight imbalance down to that 33,800 region down here. So this is an analysis assuming that how the week will close. So if we turn this off really quick and just look at the weekly, we had a strong week, so I would imagine the week wants to remain strong. So how strong does it want to push up within this territory it's claimed? I would imagine it wants to get above this level here at 34,210 and remain above that level and start to reclaim this candle and start to eat into this candle. Somewhere in that region where we're at right now. Possibly pushing a little bit higher for that strong close. We have these weekly levels that we reached into here. 34.6 is a big touch zone here for the closes. So we could try to push up again above 34.687. That coincides with the ranges we've been hitting. So do we want to be banging our head and closing up against that? It's possible they come up and sweep that territory, this entire band. Seems to be the interest zone for a possibility for the candle close. Do we come down to this region and knock out these guys first and then go up to here is the question. That is the question of the candle close. We have a long time for that to happen. This is just the Asian session, a whole day. So we'll keep you updated, maybe even do a possible New York update, because there's a lot of stuff that could change with the liquidity, like this guy entering, for example, like that 300 million, something like that could ping in and change everything. So that is basically it. Let's go into the total. I think I have to get ready. I'm gonna get called out in a minute because we got to go to the tournament, karate tournament. So total also looking to do that little bit of a burst up. Dominance dropped a little bit at the highs there, giving the alts a rally. Still kind of sideways though. The alts not really doing much of anything. Let's just do crypto bubbles. Kind of up on the day. Obviously for the week they're up. Yep, and I'm getting called out here. So that is about it. The USTD dominance going sideways, holding the trend to possibly stab up into those regions. If it holds the 236, people get knocked into USDT perhaps at some point. Dixie didn't make it up to that region just yet, but it could still go. And that is it, my friends. I'm sorry I don't have more time to shout out to you guys. Patterns are for retail. That is the truth. And there's a lot. But it doesn't need to be, you know, like this. I don't know. It's just that's what's pushed the most effectively right now. It's the most readily available, easy to digest thing, I guess. And on that note, ladies and gents, I will catch you on the flip side. Enjoy your weekend with your family. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, and we'll do the same. Bringing the fire, the accuracy, the precision, all that fun stuff. We'll